Well, the news coming from Ukraine is causing huge turmoil on the financial markets. In fact, Russia's stock market is having its worst day in history. Our business editor, Stephen Carroll, joins me. So, Stephen, what's been happening in Russia?
Well, originally we had trading suspended on the Moscow markets for the first few hours of when they would normally be open. The stock market operator made that decision to start trading an awful lot later. And what happened immediately is that we saw Russian shares tanking, falling as low, the MOEX index as low as 45% down on the day. A short time ago, down around 30%, but hitting those historic lows in terms of a one-day sell-off on the Russian markets. Now, this is an index that had also seen big sell-offs earlier in the week from the moment when Vladimir Putin announced the recognition of those two breakaway republics in Ukraine. That's the picture on the stock markets. If we take a look at the currency markets in Russia, the ruble has fallen to its lowest level on record against the dollar and the euro as well. This, as the markets are expecting more sanctions on Russia, and of course that would have a big impact on the financial sector there as well. The Russian central bank says that it is intervening in foreign exchange markets to prop up the currency and also offering liquidity to the banking sector. That's reflecting fears about how the banks might be affected too. Of course, it's their shares we're seeing most hammered today. It does, as you can see on this graph, have the reserves to do that. It's been building up those foreign exchange and gold reserves since 2014, since the annexation of Crimea. And that means that the central bank does have a financial cushion to be able to go into markets and try and prop up the value of the ruble to stop it falling too hard, because of course as the ruble falls in value, that makes buying imports much more expensive, which will in turn drive up prices of products as well if there are imports coming in from other parts of the world too. That financial cushion, the central bank, though, not unlimited.
What about other parts of the world? I mean, how widespread has been the turmoil?
It's widespread both in terms of geography and in terms of the various assets that are being affected. So oil is a good one to start with. The price of oil smashing through $100 a barrel for Brent crude, which is the international benchmark for oil prices. These figures have been going up all day. So we have seen those gains on oil extended as trading has got on. Of course, we're approaching now the time when traders in New York are going to be getting into this market as well. So we're going to see more reaction from the American side in the coming hours too. Brent crude, as you can see there, now almost at $105 a barrel. WTI West Texas Intermediate at just under $100 a barrel. These levels not seen since 2014, the last time. All of this is fears over the impact to oil supplies. Russia is the world's second biggest oil producer, provides around a quarter of supply to Europe, for example. That's something that markets are worried about. European gas futures also skyrocketing. The measure we use to track European gas prices is called Dutch TTF. That's up over 30% on the day. That's for deliveries next month, but the prices for April and May are up sharply as well. These prices, $117, €117, lower than a peak that we saw in December, but climbing rapidly again today. This is a reflection of Russia as a major gas supplier. It's also the second biggest gas supplier in the world and a major supplier to Europe too. If we turn to the stock markets in the rest of the world, then European shares down sharply in trading as well. This did come as a shock to investors despite the warnings that we had early in the week. Certainly the timing of it. We can see the CAC 40 in Paris and the Frankfurt DAX both are down over 4% in trading. This will be worries about businesses that have exposure to Russia, but also greater unrest and what that might mean for things like the travel industry. That means we're seeing travel industry shares struck quite hard by that as well. One more market I want to bring you, and it's the price of wheat and corn. These are things that Ukraine produces an awful lot of. They have shot up as well, and that's, again, over threat of what that might mean for those exports and that crucial part of global supply.
What does all this mean for Ukraine's economy?
Well, if we look at just that agricultural sector, Ukraine is, a major supplier of the world's corn and wheat. 16% of global supply of corn, 12% of the global supply of wheat come from Ukraine. That's why it's known as the breadbasket of Europe. A large proportion of these exports go to the Middle East and Africa, which means that any interruption to supplies could have a really big effect on food prices in that part of the world in particular. Financially, the Ukrainian central bank is also stepping in to take some steps today as well. They've limited cash withdrawals from ATMs to 100,000 hryvnia per day. That's just under €3,000. The bank's governor is saying they're also blocking cross-border transfers in foreign currency. They fixed the exchange rate. That's an event to contain market panic there as well. There's there's an interruption to trading on the stock market in Ukraine as well. The other aspect of this is these are the countries that we have Ukraine selling to around the world. So these are the trading partners that are going to be affected by the European Union, the biggest trading partner for Ukraine. China, Russia, that figure has fallen a lot over time too. Turkey and Belarus set to be affected too. So if you look at where exports and imports are going to be coming from, those are countries that have significant exposure to what's happening in Ukraine. More broadly, if we look at the country's finances, we know that things have not been great in Ukraine for quite a long time. They've been dealing with the IMF for years now about bailouts, for example. We've had some pledges of aid from international lenders to try and shore up the finances of the country, the government's finances. In the past couple of weeks, we've had promises of a loan of $1 billion in the United States, $1.3 billion, the equivalent of from the European Union, pledges to from the United Kingdom of $500 million. From the international financial institutions, they're speaking to both the World Bank and the IMF about the latest tranches of their loans coming from them as well. This is kind of the financial workings happening behind the scene in Ukraine that the government is also going to have to worry about its own budget, as well as, of course, everything that's happening at the moment on the ground.
Yeah, for sure. Okay, Stephen Carroll, our business editor. Thanks a lot, Stephen.